Hi, everyone. Let's talk about the year end. We are almost there. Can you believe it? It is October 24th as I'm recording this. This is my second video of today. Um, I I was aware that I will not be in the office on Friday, and I wanted to make sure that I had a video up, so I did that one first. So end of year processes for bookkeeping. Guess what? It is coming up fast, like ridiculously fast. Like this is almost November. It doesn't seem like it should be. It seems like it should still be May. Um, One of the things, and of course, oh, by the way, as always, if you enjoy these videos, please like, share, and subscribe. Hit the red notification bell if you're on YouTube. You guys know how to do the thing. We've been online for 20 years now, so you should know what to do. Please help get the word out, though, because I really am trying to help as many business owners as I can. And the more I can help, the better off everybody is. So I'm going to kind of start off by talking about this is the end of the year. We are a third of the way done with quarter four. If you are in retail, whether that's e-commerce, if it's online or offline, this is the time of year. I told a gal this morning that the reason they call it Black Friday is because that is the day the accountants get to throw away their red pens for the year. They put them away. They don't need any more red ink. If you are in retail, you will have made all of your money for the year and reached a profit for the year by Black Friday. And everything in the Christmas season is just gravy. That is what retailers really, really count on. So, what is involved in end of the year processes? As a business owner, what do you need to be aware of for end of the year processes? As the owner of an accounting firm, I'm already gearing up for it. So first thing I'm thinking about as an accountant is tax season starts in February. I want to start having my clients submit their tax documents to me as early as possible in January. So start thinking about your tax situation. Do you think you are going to need to pay taxes? Do you think you are going to receive a refund? If you're a business owner, you may not be too sure about how that works. If you just received W-2 income, you probably already know. This is also starting in January. Your children will go from being rugrats to being, oh, those darling little deductions I get to take. However, some of us, our kids went and grew up, and now we have to deal with coming up with deductions to cover what we used to be able to put to our children. My baby got married in August, my youngest. And so now I'm kind of going, I have no more children. They're all grown up. They get to do their own taxes. So I am depending on my business income showing a bit lower, so that I can then show as little income as possible for government. And so I'm already thinking ahead. I'm like, well, this is a good time for me to buy extra equipment? Do I need more software? Do I need another laptop? Do I need any more tablets? Do I need any other electronics? Do I need a bigger monitor? Do I need to upgrade my webcam? Say yes. Do I need to invest in some podcasting software? Do I need to find an office where I can make it soundproof and do my podcasts from there? There's a lot of things that I can start to think about that I could spend money on this year and reduce my tax bill for this year. Or if it makes more sense, I could look at it and say, I anticipate making more money next year, so let's put this off till next year. This is the time when you want to look at your major. Again, this is assuming that your fiscal year is the same as the calendar year. So if it's not, we've passed the date. But assuming your fiscal year is the same as your calendar, this is the time you need to be sitting down, thinking about any major purchases you want to make, and look and see, is it a good idea to do this year in 2023, or do we want to push it off to 2024 to reduce income for next year? there is, well, there's not a limit on the number of deductions you can take, but there is a point at which the IRS will start to say that's an awful lot for your business. By way of example, as an accountant, if I bought a backhoe and tried to say it was for my accounting business, the IRS is going to look at me pretty askance. They're going to be like, what on earth are you thinking? Accountants don't need backhoes. Computers, yes. Spreadsheet software, yes. Accounting software, absolutely. But not heavy equipment. That's not in the list of normal and ordinary for an accounting firm. So you need to think about, and they probably let me take a car, but I would have to be very intentional about how I purchased it, how I used it, to make sure that it falls within that normal and ordinary category. So first thing you want to do this last 2 months of the year, because this will go up today, October 24th, is look at your major expenditures. Do you need to make some more expenditures? Do you need to spend more money to save on paying the government? Keep in mind, for your business, you're paying for these things with pre-tax money. So in other words, the government lets you take these expenditures and make them with money before it gets taxed because they want us to be in business. They want us to be able to have the money to put into our business and then grow the business. Main Street is really where the economy is. If you watch Bloomberg, if you watch CNBC, if you watch all of these, even most movies about the business world, they're all focused on Wall Street. Well, Wall Street is big and flashy and sexy. So a lot of people think. I'm married to a Wall Streeter, so I know it's none of those things. It can be, but it's drudgery, just like any other job. It's a lot of boredom, punctuated by a lot of excitement. So the government wants us to work. They want us to work. They want us to own our own businesses because that's where the economy truly rests. And they know that. They know that the economy rests on small business owners, mom and pop shops who are just struggling to make ends meet. So we want to look at your business and see, what do we have expenditures coming up that we need to take from a tax perspective? If you've ever wondered, by the way, why, I hate to pick on McDonald's, but why McDonald's raises all their buildings from time to time and builds a new one on the same lot, it is because they get a tax break for doing that. So we want to look at your business. We want to see how your business is doing financially, and then make an analysis about what tax breaks we can find for you. Most of them are pretty simple. It's things like, if you don't have a retirement plan, get one. If you don't have someone to help you with the retirement plan, please reach out to me. I can refer you to someone, but you need to have a retirement plan. Why? Well, number one, if you're employed and your employer matches your contributions, that's free money, folks. It's free money. Number two, because some tax plans are tax deferred, meaning you don't pay tax on that money now. Others are not tax deferred, but you get a credit for saving. So there's a saver's credit. It's for low to moderate income earners. So you may get a credit just for having a retirement plan, just for putting something into your retirement account. And from a finance point of view, I'm going to tell you, I want to see every single one of my clients in a retirement account with money that they're putting aside, because that money grows so fast. I've been putting money into a Roth IRA for about a year, and it's not a lot of money, and it has grown massively, and I'm not doing anything with it. This is not money that I'm going to miss. This is just money that I was like, well, this is my pay. we'll put it in a Roth. We'll see what it does. And it has exceeded my expectations. So if you would like to know about that, let me know. I'm happy to refer you to the appropriate people. But that is one of the easiest ways that you can come up with to be able to manage your tax burden, especially as you age. I have chosen to go ahead and pay the taxes on mine. It's a Roth, so this is not tax deferred, simply because I expect to be in a higher tax bracket in a few years than I am right now. Most people are going to expect to be in a lower tax bracket, so they may want to defer taxes. I would rather have kind of a mix so that there's some that I'm paying taxes on and others that I'm not. And honestly, I hate paying taxes, so I'd rather pay them now and be done. I do expect tax rates to go up. We also want to look at any tax saving strategies we can come up with. If we did your taxes last year, we can immediately start generating tax plans for this year. Like I said, the top one is always going to be retirement. If you have a retirement plan, you should max it out. And it really is not that much to max it out. You could max it out before the age of 55. $500 a month will max out a Roth IRA, or it'll max out a 401k. That's your maximum contribution. And if you can get your employer to match that, that's even better. So when it comes to retirement plans, some are tax deferred, some are not. You probably want to mix. You can also start setting up annuities. There's a lot of things you can do to prepare for retirement. I have never counted on Social Security. I have never expected it. I never really expected to get this old, honestly. But I never expected it to be there. I still don't expect it to pay much. So I am definitely taking control of my retirement now. If you are young, one of the best things I did for my younger children, my son, was I got him connected to my retirement planner, and she got him set up. So even if he's only contributing $100 a month, that's probably worth $500 a month at my age because of the miracle of compound interest. So we want to start looking for that. We also need to start sending out 1099s as early in January as we can. So starting in January, we are going to be sitting down with all of our clients and determining what we need to make sure that those 1099s are correct. There's nothing that drives me bananas faster than having to undo and redo 1099s multiple times because the client didn't give us correct information. So we will be going through that multiple times with our clients, double checking. Please read this report. How much did each of your these are the contractors that we have that we need to send 1099s to. Who gets a 1099? Anybody that's not incorporated that made more than $600 in a calendar year. So if you happen to own an S Corp rather than an LLC, you do not receive a 1099. The government expects that since you were so good that you qualified for an S Corp, they do expect that they will that you will keep track of your money. Okay, that goes double for a C Corp. They expect that you're going to keep track of your money, that you will know what your inflows and outflows are, and that you will report them honestly, because the penalties for not doing that are much more severe than they are for individuals. Individuals, however, so that's anyone that is an individual, a sole proprietor, is part of a partnership, or is a single or multiple owner LLC. All of them will get 1099s unless they've elected to be treated as a corporation for tax purposes. So the 1099 is an informational return filed with the IRS. We provide those as it's informational. So you don't really have to do anything with it. If you are filing a business income, which if you're receiving a 1099 NEC, which stands for non-employee compensation, you should have a business. It should be on Schedule C. Then we will need to report all of your income and all of your expenses and all of your assets and liabilities. We need to report all of that. Sometimes it looks better on an S Corp return. Sometimes there's a point at which we want to put you in as an S Corp. But if you're not receiving a lot of income yet, we want to make sure that you stay a single owner LLC. Once you switch to an S Corp, by the way, you can't switch back for 5 years. So that's something we take very seriously. Anyway, we send out 1099s. 1099s are an informational return that go to the taxpayer that received the money, the taxpayer that paid the money, and to the IRS. Okay, so that lets the IRS know that ABC Company paid John Smith $697 for the calendar year of 2023. They are then going to go back and they're going to find all of John Smith's 1099s. They're going to total them up and say, well, John Smith made $10,000 in non-employee compensation last year. We're going to expect to see at least that much on his Schedule C or 1096, if that's relevant. For those of you who don't know all of the arcane forms, 1065 is the form I was thinking of, and that's a partnership return. So if you have a multiple owner LLC or you have partners, that's what return we would need to file. So they're going to look, they're going to see, do the gross receipts meet or exceed the amount that was reported to the IRS on 1099? If they do, you're fine. If they don't, now we have a problem. They're going to go back and audit you. So that's one of the things that we need to do at the end of the year. One, we need to do some tax planning. If you would like us to do tax planning with you, all of the information that you need to book an appointment is in the description below. We would love to hear from you. So tax planning, then we've got 1099s. And then early in January, we start to want to get tax forms. And the tax forms we're looking for are all the forms that we need to be able to file your taxes. So anything you receive in the mail that says tax forms enclosed, we need to see those. Even some that maybe you don't think are relevant. We at least want them, we want to be able to see them. For our paying clients, we do set up a folder on our system that's password protected so that they can upload all of their forms and documents there. That way they don't have to worry about it or finding them all at once. They just, I keep trying to tell them, bring in the mail, open all of your mail, and if it's a tax form, take a picture of it or scan it and upload it to our system, then we'll have it and you'll have it. You'll have it because you'll need to put it in an email or upload it somehow. You'll always have access to it because I don't really purge information. I just get more storage. And if you ever need it, it's there. So we want to start thinking now about tax time. Some other end of the year procedures. We also want to run your end of the year, your final financial statements, especially the balance sheet. We are at the end of the year going to go through your balance sheet very closely. And we're going to check and make sure that we have all of your fixed assets. We have all of your liabilities. We have everything that your business is committed to. You may be wondering, why do I have to give you all of my liabilities? I want to show things. I don't want to show where I owe money. Well, because it's required. It is under generally accepted accounting principles, or GAAP. We do have to show all of your liabilities. We have to show all of your assets too. So we need to know all of those things. When you bought that car, when did you put it into service for your business? Did you do it December of last year or January of this year? That's important. We need to know. Did you, when you bought this, what was the gross weight? If it's more than 6,000 pounds, we might be able to get you a bigger deduction under subsection 179. We need to know what its cost basis is. What's a cost basis? I can hear you saying, I don't want to sound stupid, but I don't know what a cost basis is. Folks, I didn't learn what this was until I was well into my 50s. Don't feel bad. Cost basis is just the price. So, and it's not just the price. So if I went and I bought, I actually did, I have a 2021 Honda Civic. It cost about $32,000 if I remember correctly. So if I was to fully put it into service for my business, I would have it wrapped with my name and logo and phone number on it. I might have to have it repaired. I might have to do some things to it. So if it's a service truck for a mechanic shop, a lot of diesel mechanics are looking for this kind of thing. So if you buy a truck where you can go do mobile mechanic stuff, you're going to have to outfit that truck. Okay, so you're going to have to get a generator, a compressor, toolboxes for a truck. You're going to have to get maybe welding materials. I don't know, I'm guessing. And find a way to mount them on the truck. You might need to have some extra cabinetry, some extra secure space where you can put your tools and you can lock them up. All of that actually goes into the cost basis. It's not just, I bought a car for 30 grand. It is, I bought a car for 30 grand, and then I put a wrap on it for 2 grand. And then I put special tires on it. And then I lifted it because I needed to for my business. Or I put racks in it. Or I added a carpet cleaning machine to the truck, or whatever it is, just whatever it is. All of these changes to the vehicle that are required for you to be able to put it into service as your vehicle, that all goes into the cost basis. So again, if you bought a dump truck and it turns out that there's maybe you got a really good price on it and you bought it, but there's a problem with the transmission. Well, in order for you to put that truck into service and make money for you, you have to fix the transmission. So the cost of the transmission now goes into the cost basis of the truck because you haven't put it into service yet. If you start making money with it and a few months later it breaks down, then it becomes a maintenance issue. And that's something that does not go into the cost basis, although that's something we could talk about to see if it's appropriate or not. So we need to know all of your assets. We need to know all of your liabilities. When we know all of those and all of your expenses, then we start to have the framework with which we can start to construct tax strategies. Not only tax strategies, but business strategies. There's a lot more that goes into the financial side of business than just taxes, although taxes really are at the forefront of everyone's mind. So we have payroll. We need to make sure payroll is taken care of. We have we need to do some projections. We need to do some budgeting. This is a really good time at the end of the year before the beginning of the year insanity begins. Is a really good time to sit down with your accountant, do some budgeting, do some forecasts, do some goal planning. Start to review what's in your accounting software. What are your financial statements telling you? And then you can start to decide, oh my gosh, in my case, maybe I say I need 20 more clients by the end of the year. Now, how do I get them? And that's going to give me something to work on for the rest of the year. Or I might say, well, I have so many clients that my workforce is booked up. I need to hire another bookkeeper. That all of these are going to depend on your business. If you're a service-based business and everybody is booked up, then your decision becomes, Do I hire more people to serve the customers that want to be served? Or am I restricted by, do I have space constraints? For example, if you have an auto repair shop, you may be restrained by the number of bays you have, the number of lifts that are available. And if that's the case, then it becomes do I hire more people and expand to another location? Do I move locations? There's a lot that could be a response to that. Okay, you could choose to move, you could choose to stay where you are, you could decide that you have enough business, you don't want any more. You could decide that you want a separate location. Like I said, there's a lot. If you're constrained by physical realities, then there's a lot of things that you could decide to do. And we would love to help you with those decisions. But in order to make those decisions and have them be informed, we do need to know what your business is doing currently. Everything to do with it. Everything. You should have no secrets between yourself and your bookkeeping company. So understand that if we're asking you for information, believe me, we're not getting any prurient interest in this. We really need to know. We need to know because we need to make sure that your books are correct. And we need to make sure your books are correct because if you go and ask for a loan, you need to know that the books are correct. You need to know if you're meeting with your business coach, are your books correct? So that you can make decisions based on correct information. That's pretty much it for the end of the year. It is going to be very caught up in taxes, and I am going to come back and discuss these again. But for right now, I'm going to say goodbye, and I will talk to you again soon.